Hello, this is Connie Belden, and today we're going to talk about buyer and seller journal entries. This video will concentrate on buyer. The next video will concentrate on seller. We're also going to deal with transportation cost as part of these entries, or at least in some of these entries. So let's take a look at this buyer column here first. So if it says FOB, that stands for free on board destination. That means the seller pays all the transportation cost and the buyer is not charged any transportation or shipping costs. Free shipping to the buyer. So for example, if you have an Amazon Prime as a buyer, when you purchase something using your Amazon Prime, you get free shipping. So therefore, as a buyer, you are not being charged any shipping. So therefore, there's no entry as the buyer. The next option is free onboard shipping point. That means the seller takes it to the shipping point, such as a UPS station, but the seller is going to add shipping cost on to the buyer's invoice. So in other words, when you buy something and they add shipping cost onto your invoice, you are paying it as the buyer. So as the buyer, there is no separate shipping account, but instead you consider it part of your inventory. So you're going to add it into your inventory and accounts payable when it is added onto your invoice by the seller. The next one is also free on board to shipping point, but the difference is it's not billed or invoiced by the seller. So therefore, the buyer either maybe pays it by cash beforehand or as it arrives. So therefore, there's still a debit to inventory. You still consider it as part of your inventory cost, but the credit is to cash instead of accounts payable since you weren't billed for it as the buyer. Okay, so let's take a look at some actual journal entries, and I'm going to go over them, and then I'll flip to my other sheet that shows them written out. Okay, so let's start with the buyer transactions. So first of all, we purchased $500 in merchandise with cash. Okay, so that is a fairly straightforward entry. When you buy merchandise, you increase your inventory, so you debit inventory. Inventory is considered an asset because anytime you have inventory in your store, items that you bought that you haven't resold yet, it is an asset to you until you sell it. Then it becomes a cost of goods sold, which we're talking about in a moment. So I'll debit inventory and I bought it for cash, so this time I will credit cash. Okay, the next entry, number 2, we purchased $2,000 of merchandise on account with terms 2/10 and 30 and free on board to destination. So let's talk about what those terms mean. First of all, we already know free on board to destination, that as the buyer, we are not charged any shipping, so we don't have to worry about it. The 2/10 represents that you may take a 2% discount if you pay it within 10 days of the invoice date. This is just a little incentive by the seller to get you to pay it early so that they collect their money quicker. It could say like 1/15. That means you would get a 1% discount if you paid it within 15 days of the invoice date. So the first number represents the percentage of discount. The second number represents how many days within the invoice date does it have to be paid to get that discount. Otherwise, it's in 30, or the net amount is due within 30 days. So if you pay between days 1 and 10, you get a 2% discount. Between days 11 and 30, you pay the net amount. So for right now, we're just going to record it at the full amount of $2,000. So therefore, the journal entry, like in number 1, would be a debit to inventory because you're purchasing merchandise. You're buying inventory for your store, such as you're buying Levi jeans that you're going to resell later. But while they're in your store, they are an asset or inventory to you. Okay, and then this time, since I bought it on account, I'm going to credit accounts payable. Okay, let's look at another sample. Number 3, we returned $50 of the merchandise that we bought in number 2. Remember, we bought $2,000 in merchandise. We're now going to return $50 of it. And then in number 4, we are going to pay number 2 less the return of number 3 within the discount period. So let's go ahead and record both of those journal entries. Okay, for the first one, for the return of $50 worth of merchandise, okay, what you're going to do then is you're no longer going to owe for it if you return it. So your debit or reduce accounts payable, and you would no longer have it in your inventory. So you credit or reduce inventory. Remember, inventory is an asset account. So basically, I'm doing the reverse entry of what I did in number 2, except for this time, it's just for $50. Okay, now keep in mind in number 4, when it comes time to pay number 2, less a return of number 3, look at what you have in accounts payable. In number 2, I credited or increased accounts payable by $2,000. In number 3, I debited or reduced accounts payable by $50. So $2,000 minus $50 means that I have $1,950 in accounts payable. I'm paying off all that I owe, so therefore I will debit accounts payable for $1,950. Now remember, we paid it within the discount period, so we get a 2% discount. But that 2% discount is on $1,950, the $2,000 less the return. We can't take a discount on something we returned. So I will credit or reduce inventory by the amount of discount because I didn't end up paying that amount for it after all. So $1,950 times 2% is a discount of $39. So I'll reduce inventory by $39 since I didn't end up paying that $39 for it after all. There is no separate account for the discount as a buyer. Okay. Then the quickest way to do the cash, I'll show you a couple different ways here, but the quickest way then, you got a 2% discount, so you owe 98% of that $1,950. So 98% of $1,950 is $1,911. So I'll credit cash for $1,911 and credit inventory for the discount of $39. Okay, let's take a look at 5A, B, and C. And on this one, we are going to have some shipping costs involved. So let's take a look at 5A and B first. Okay, in 5A, we purchased $1,000 of merchandise, free on board to shipping point, 2/10 or N30. So again, we'll get a 2% discount if paid within 10 days of the invoice date. But this time, we were also billed, or was added to our invoice, $50 in shipping cost. So we have to include that as part of what we owe. Okay, and then we returned 200 of it from 5A. And we're not going to worry about shipping on returns. So let's go ahead and journalize 5A and 5B. Okay. So for 5A, there is no separate account for the shipping for the buyer. You just consider that as part of the cost of your inventory. In fact, the number one reason why shopping carts are abandoned when ordering online is because once they get in there, they realize they're being billed a high amount for shipping and handling. And they realize that that's an additional cost to the item. So therefore, as a buyer, we just add that $50 that we were billed in shipping onto the $1,000 that we bought in inventory. So I will debit inventory for $1,050. And I will credit accounts payable for $1,050. Now keep in mind, when we get to that 2% discount, and just like in number 4 above, we don't record the discount until we pay it. So when we get to that point, we will not record a discount on that $50 shipping. If you have a coupon for 20% off, it's only off the merchandise. It's not off the shipping. Okay? And then in 5B, we return 200, so reduce accounts payable, just like we did up in number 3, and credit inventory. And again, we're not going to worry about shipping for the return. Okay, so in 5C, when it comes time to pay off what we owe, let's take a look at accounts payable. So we have an increase, a credit to accounts payable for $1,050. Remember, 50 of that is shipping. We have a return or a debit to accounts payable for $200. Okay, so shipping is part of the accounts payable. It's just not eligible for the discount. So when it comes time to pay it off, my accounts payable balance needs to be debited for $1,050 minus $200. So $1,050 minus $200 means I'm going to debit accounts payable for $850. Okay, let's skip to inventory next. Only $800 of it is eligible for the shipping. In fact, we can go right here. Remember, we put $850 into accounts payable, but $50 of it was shipping. So only $800 is eligible for the discount. So 800 times 2% is 16. And again, as the buyer, the discounts are a reduction of inventory, so I credited inventory. Okay. Now, to determine the amount of cash, it should be $850 minus 16. That's one way, $834. But also to check yourself, take the $800, the amount after shipping, times 98%, because remember you got a 2% discount, so take it times 98%, and then notice I put here in red, make sure then you add the $50 shipping back in for $834. So determining cash is a two-step process. You got to take the amount in accounts payable minus the shipping, so that left me with $800. Then I took that $800 times 98% because I get a 2% discount, so I owe 98% of it. And then don't forget to add the entire $50 shipping back in for the $834. Because again, shipping is not eligible for the discount. Okay, let's take a look at number 6. Okay. In 6A, same scenario. We purchased $1,000 worth of merchandise, free onboard shipping point 2/10 and 30. And as the buyer, though, we paid the transportation costs in cash, maybe up front, so it wasn't added to our invoice. Then we returned $200 worth of the merchandise, just like we did in 5B. And then in 6C, we are going to pay it off. Okay, so let's look at the journal entries associated with that. Okay, so since we weren't billed any shipping on this one, we will debit inventory for the merchandise of $1,000 and credit accounts payable for $1,000. Again, we don't record the discounts until we pay it off. You'll notice in every situation, we didn't record the discounts until we paid it off. Now, since we were not billed for the shipping, but let's say we paid the shipping cost in cash up front, we still debit inventory, so there's still $1,050 going to inventory. But I did it as a separate entry to show you that in this case, instead of crediting that $50 to cash, instead of crediting it to accounts payable, we're going to credit that $50 to cash. So $1,050 is going to inventory, but $1,000 is going to accounts payable, $50 is going to cash. For the return, that's exactly the same as 5B. I'll reverse my previous entry. I'll debit accounts payable for $200 and take it out of credit inventory. So now let's look at our accounts payable for 6C when it comes time to pay it off. Okay, we were not billed for shipping, so we have a credit of $1,000 and a debit of $200. That's what's going to my accounts payable. So 1,000 minus 200 means I still owe 800 in accounts payable. So 800 is debited for accounts payable. Okay. Now for cash, there's no shipping involved here, so it's an easy calculation to do. Just take your 800, the amount in accounts payable. You get a 2% discount, so take it times 98%, and that gives you $784. Again, you already paid that shipping in cash, so there was no additional shipping to add in like up in 5C. Okay. For inventory, it's the same amount as 5C. 800 times 2% is $16. Okay, so that deals with the various shipping costs that you might handle as far as free onboard destination and free onboard shipping point. Okay, let's take a look at number 7. Okay, in number 7, you purchase merchandise on account with a list price of $5,000. This one's going to have a trade discount of 10%. A trade discount is a discount that you might give to somebody basically that's doing or purchasing items to use in their business. For example, Star Lumber might give a trade discount, for example, in this case of 10%, to building contractors, but yet not give that 10% maybe to regular customers like you and me. Okay, the trade discount is taken right off the top, so we'll do that in a moment. Terms free on board shipping point and terms 1/10 and 30. So in addition to that trade discount of 10%, if they pay it within 10 days, they are going to get another 1% purchase discount. And then shipping of $100 was added to our invoice. Okay, so there's a lot of parts to this one. So let's start out. First of all, we can take that trade discount up front. So we get a 10% trade discount on the $5,000. And remember also that we are paying $100 of shipping that is being added to our invoice. Okay, so basically the trade discount results in we owe 90% of it. So let's take a look at the journal entry. Okay, so what we'll do is we'll take 5,000 times 90% because we get a 10% trade discount. So that gives us 4,500. This was free on board to shipping point and added to our invoice. There's no trade discount on the shipping, so I'll just add the 100 in. So I'm going to debit inventory for 4,600, and I'm going to credit accounts payable for 4,600. Again, the 1% additional purchase discount I will take at the time I pay it, as long as I pay it within the 10 days that it specifies. Okay, next we are going to have a return. Okay, there's going to be a return. We are going to return $1,800 of our merchandise, and $1,800 is the amount we will record it at. We actually, at list price, returned $2,000. But remember, we took a 10% trade discount. So 90% of 2,000 is 1,800. So we do record it at 1,800, not 2,000. Okay, so otherwise the return would be handled very similar to what we did up in 5B and 6B. I'll debit or reduce accounts payable and credit or reduce inventory for 1,800. Okay, now let's assume that we pay it off within the 10-day discount period, and for this one you get an extra 1%. Now remember, you don't get a 1% discount on the shipping. Let's do what we did before. Let's take a look at what went to accounts payable. So 4,600 was credited to accounts payable, and then 1,800 was debited to accounts payable for the return. So I'm going to debit accounts payable for 4,600 minus 1,800, or $2,800. Shipping is part of the accounts payable. Okay, now for cash, again, let's do it in a two-step process. Okay, accounts payable has 2,800, but remember 100 of it is shipping that is not eligible for the discount. So I'm going to take 2,800 minus 100. So 2,700 is eligible for that additional 1% purchase discount. I will then take 2,700 times 99% because I got a 1% discount, so I owe 99% of it. And then after I take that 1%, I will add the $100 shipping back in. Don't forget, you don't get a discount on shipping, and you have to add it back in. So cash is $2,773. Inventory is the 2,700 times 1%, the $27 discount. And again, make sure mathematically wise, 2,773 plus 27 does equal 2,800. So So making sure that your debits and credits equal is a way that you can check some of your mathematics. So again, a couple important things to keep in mind. Trade discounts are taken at the time of purchase, but the purchase discounts like 1/10 or 2/10 are not taken until the item is paid, and we only take it on any merchandise after any returns. We don't take it on any shipping. I hope these help you out with buyer entries. I recommend that you go back and maybe review and look at the video again before you start doing your homework on this chapter. The next video will be on seller entries. Thank you very much.